Mr. Bonnafe, thank you so much for being with Bloomberg TV again for this first quarter earnings. 2.8 billion euros of net in the first quarter, up 9.6%. But revenues from the CIB are down. What was the challenge here?
Well, generally speaking, these results are strong, especially if you compare those results to those of other European peers. So first of it, 2.8 billion euros total. Away from exceptional items, it's still more than 2 billion euros net of tax, so it's strong. And if you look at CIB, revenues are down, but there are two folds. One is the universe of financing businesses. We are implementing the deleveraging, so of course those revenues can only be down. This is just normal. But we have the corporate customer base that is very strong, and this bank is going to be a key driver for the future of BNP Paribas and CIB. And second, we have market businesses, and especially fixed income, that is up 6%. And fixed income, again, is number one in the Eurozone, in euro-denominated origination, bond origination. Number 10 in terms of US dollar-denominated origination. So these results in both capital markets are strong, and for the financing businesses are just in line with the deleveraging plan.
But still, Société Générale still had revenues from the CIB rising in the first quarter. So was there something that they did that you didn't do, or was it more difficult?
I'm not going to enter in a comparison with SocGen, of course. Their first quarter 2011 reference base was very different, so we cannot take that as a true comparison.
On the deleveraging, you were talking about deleveraging just now. Your ROE, you're saying here, is 11.5% at the moment. What is your target for the medium term after 2013?
So first of all, with those 11%, we have the best level through Europe, including all banks, Swiss, British, and banks from the Eurozone. So these results, again, are strong. And second, for the midterm, it's too early to say. We need to know with more, I would say, details what are going to be the rules in terms of capital, liquidity. Of course, we very much depend, we're a commercial bank, we very much depend on the outlook of the economy, especially in Europe. So it's really too early to say.
On the outlook for the economy in Europe, what is your main concern in the coming months? Is it Spain? Do you think you might be impacted, for example, as a ripple effect on European growth from the Spanish real estate sector that's doing badly at the moment? Is that one of your concerns?
We are not particularly concerned by Spain. This is not one of our key countries in terms of business. Of course, we have some businesses in Spain, but this is not one of the key countries. And in terms of sovereign exposure, it's very low, a few hundred million euros of portfolio. And if we look at the general outlook of Europe, of course, the economy is slowing down, but we do not believe that this is going to be a recession, especially in France or Belgium, which are two key countries for us in Europe.
About Spain again, even if your Spanish exposure, as you're saying, is not very important, don't you think that this can have a domino effect on European growth?
There are absolutely no domino effect. The fact that Spain is not in a position to reach the target they gave himself to the growth, to the reduction of public spending and so on, is very much linked to the fact that, globally speaking, the Eurozone economy is slowing down. We do not see any domino effect in terms of the situation in Spain and other countries potentially in Europe.
How about Italy? Revenues grew for BNL, but the cost of risk increased slightly. How fragile is your Italian subsidiary?
BNL is a strong platform. If you look again at the result this quarter, they posted the pre-tax net result of 150 million euros, so this is very strong. In terms of cost-income ratio, They are down to 54%, so this is most probably the best-in-class cost-income level. So it's a very efficient platform. Of course, cost of risk is going up. This is coherent with the outlook of the economy, but net result is there and is going to stay for the year, of course. And if you look at what's being implemented by the Italian government, it's very strong. Mario Monti has taken key decisions, has taken action, and obviously it will start to pay in the years to come. So these are the main elements. And again, BNL is one of the strongest platforms in Italy.
Still, there seems like in the past month, since the beginning of the second quarter, there is some new uncertainties. Markets have been down. How was your beginning? How was your month of April? How was your beginning of the second quarter? Was it more volatile, turbulent?
We're not commenting on the second quarter. We are just commenting on the first quarter results. But this is true that if you look at markets in general, in rough terms, April is a different month compared to the first quarter. But this is general. This is not specific to BNP Paribas.
Of course, it's for everyone. But do you believe, like other banks, that the situation has been deteriorating? Is deteriorating?
The momentum we are looking at is somewhat different to the momentum we enjoy in the first quarter. So we can say this, and we cannot be too excessive, say things that are too negative. So this is not the situation.
What are the uncertainties that remain?
Uncertainties are very much linked to the way governments, on top of anything that is reduction of public spending, will be able to implement some initiatives in terms of growth. This is a new idea. Some key major players in Europe are pushing up this idea. It's quite new, and we believe that this is very much the key point. On top of reducing public spending, we need some growth initiatives.
On this, obviously, it's quite obvious that Europe is looking at the French elections, which are in 2 days. François Hollande has been calling for a growth compact to be added to the EU treaty. Do you believe it's a good idea, considering what you've just said? Do you believe it's absolutely necessary to add a growth compact? And are you worried about the transition with the new French-German couple if the president changes?
I'm not commenting on that kind of situation. We can only say that, yes, indeed, having some kind of initiative in terms of growth is key. This is not only Europe that is, to some extent, looking at that. Also, the International Monetary Fund is looking at the situation that way. So it's obvious that you cannot build a future only on reducing public spending. This is obvious. You need also to have fresh air so that people, entrepreneurs, companies, corporates, everyone could look at the future and take initiative. This is the basis of the economy, at least market economy.
What would it look like? Because to me, it's kind of hard to understand. We're talking, okay, we need growth in Europe. Okay, but for example, for banks, what form would it take in terms of this growth compact? What is it?
We're not talking of banks. The point is our customers. These are private individuals, companies, entrepreneurs, SMEs, and so on. So these initiatives are for those customers, and we very much depend on those customers. Do they have projects? Do they have investments to fund? Do they have? This is the point. This is not about banks. This is about the economy and especially corporates, companies, entrepreneurs.
Would you welcome a third one of LTRO?
We don't believe this is necessary.
Okay, even if the situation like in Spain deteriorates, for example?
As of today, we really do not believe this is necessary at that point in time, in any case.
Did you said you completed about 80% on your adaptation plan. what's left to do? And on the job front, for example, did you complete your 1,400 job cuts globally?
So if we're looking at the adaptation plan, yes, we have completed 80% of the total. From an operational perspective, we should reach 100% for summer. So it's a very satisfactory situation. In terms of jobs, we are around 60% of the plan, and we should close those plans at this plan by summer also. So nothing new. We are, I would say, quite ahead of the initial schedule. That plan was announced early September, and we initially were talking about the end of 2012. By summer, we should have done most of it. So this is a very satisfactory situation, because once it's done, you can very much concentrate on the future of different businesses, and you work for the mid-long term. So it's very much a positive situation.
So you wouldn't need more job cuts?
We don't think so.
On asset disposals, you anticipated, on corporate loans losses, you anticipated losses from selling corporate loans would be about 800 million euros. Do you think you'll keep that target, or is there any chance that could be slightly higher?
For the time being, and this is very much linked to the quality of the assets from the BNP Paribas group, we believe that cost of selling portfolios is in the end going to be below the initial target, so which is a very positive point. And on top of that, if, for example, you consider and you look at the reserve-based lending transaction, this is a plus. So we are making then a capital gain. So all in all, we believe that this part of the plan in terms of one-off is going to be less costly than we thought initially.
Very last question. Let's say, if there was new legislation on splitting retail and investment bank, would it be doable for you to have a spin-off of your market activities?
This is a very, I would say, British way of looking at the situation. This is, to be exact and precise, the Vickers recommendation. We do not believe this is going to be the European way of looking at the situation, so we are not planning this, I would say, rule to be rolled out throughout Europe. So this is the way we are looking at the situation.
But are you ready if that happened?
In any case, we will adapt the group, so this is not, but instead of using IT, time, management to concentrate on the future, you need to adapt to a new rule. So if you ask the point, we do not believe this is a good move, and we don't believe this is going to happen in any case.
Thank you very much.
Thank you.